Welcome back to Market on Close. Shares of Johnson & Johnson hit a new all-time high today after Wells Fargo upgraded the stock to overweight from equal weight and raised its price target to $212 from $170. The firm says it sees potential upside to J&J's pharma business and lowered tariff and pricing risks. Wells Fargo said the stock's valuation presents an attractive entry point right now. So now it's time for Options Corner. Joining us is Rick Ducat, our lead market technician here on Schwab Network, to talk all things Johnson & Johnson. And Rick, as far as, Johnson & Johnson's performance, we can see here just more broadly against the market, but also against healthcare sector, how does it look overall?
Well, fighting its way back up to just be basically in line with the broader S&P 500, but outperforming the pharmaceutical ETF, IHE here, and as well as the healthcare sector as a whole, down minus 4.1% during the year. Not really super great overall. A lot of legislative risk in this sector. So many different things are changing so quickly here. And to break down the healthcare sector a little bit more, the winners, the distributors, are companies like McKesson and Cardinal and Henry Schein. Those are companies that buy medicine and supplies and healthcare products in bulk, and they handle the logistics of delivering at places. Then we have the supplies themselves, pharmaceuticals. They're pretty close to the sector, so that would include Johnson & Johnson, Pfizer, Eli Lilly, etc. And then managed care is the one that's doing the really poorly here. So that's the much beleaguered United Health, Molina, Humana, etc. here. So everything's kind of flip-flopped today, though. These are the ones that are doing better here because Humana had some news leaked about their earnings, about how many people are enrolled in Medicare. And then the pharmaceutical companies are the ones who are seeing some potential changes here. Pfizer had a deal with the Trump administration. So it's a whole bunch of different factors here all coming together for this kind of a topsy-turvy industry right now.
A very topsy-turvy industry, but on pace for a good week on some of that Pfizer news that you mentioned, as well as this Humana leak here. But as we look more specifically at Johnson & Johnson just on its own, what does its chart show us?
Well, trending upward pretty nicely here. You can see that we have a bit of a bull flag type of pattern here. This is the kind of thing many traders keenly look out for. You can see that the low point came in roughly around 174, 175. We had a sharp rally to the upside, a brief period of pullback here that stabilized at a fairly consistent level around those old high points here. And then we had a push to the upside that took out the initial highs. That came in near 181. That was our green line there. So a surge to the upside. Now we are having another breakout upward higher here. So 186, 187, that was the old high point where our gap began. It's been left in the dust for now here. If we were to add some of our other studies in and consider momentum, for example, we can see that the RSI has crossed into the overbought area. It is still making new relative highs. So that is what you'd want to see if you were bullish in this name. Meanwhile, volume profile shows the heavy trading areas all the way back down near 176, the area that we mentioned earlier. And then we can see our +2 standard deviation channel comes in around 190.60 or so. That could be an upside area to watch out for if this move starts to run out of steam.
Yeah, and we're very close to that right now at about 189.10. Shares up more than 1.5% today. As far as the options activity looks, knowing that we've seen some movement in the healthcare space, has it been typical?
Well, this is not the most actively traded sector here. And that's kind of interesting, too, because these are more defensive names. But, for example, like biopharma names can be quite risky. It's kind of an all or nothing shoot with these smaller companies. But these ones are typically viewed as being a little bit more defensive and kind of more of a consumer staple type of play. Not exactly that, obviously, but more in line with that type of thing. But we can see here our expected move for October 17th, about 3.9% during the next 14 days. So not too terribly volatile. We are near those highs, though. This is one way we could try to take a stab at identifying where we might see a slowdown. So the expected move comes in near about 197 here. To the downside, though, the lower end of that range lines up quite closely with this 181 level that we highlighted here. It also converges with some of our technical indicators as well. So that seems like a point traders could have their eye onto the downside.
And as far as any trader action we saw, were there any notable trades on Johnson & Johnson?
There was a lot of activity in the October 17th 175 calls, but it could have been multiple different traders. It was too hard to tell here. One big single opening trade I did see, though, plus 300 June 18th, so going out into next year. 190 strike puts at an 1120 debit here. A bearish opening trade, $336,000 debit. Needs a 5.4% move to the downside. Expected move 13.7%, but pretty far out in the future, a lot could happen.
All right, Rick. Well, thanks for talking healthcare with us on a big day for healthcare and for Johnson & Johnson more specifically. That's Rick Ducat, our lead market technician here on Schwab Network.